Welcome to Multiple Perspectives. I'm David Lofgren. The concept of asset management can have a variety of meanings. Most often, we think of asset management as referring to managing a portfolio of public equity investments, shifting a client's money from stocks or funds to other stocks or funds in order to avoid the loss of capital due to value drops in certain sectors or even specific companies. In the world of commercial real estate investing, however, the job of an asset manager is another thing entirely. The goal is still the preservation and growth of the investor's capital, but the work that goes into protecting the investment is far more, shall we say, concrete. When an investor chooses to invest in commercial real estate, after all, they're investing in a more tangible product, the actual brick and mortar that make up the built world around us. In the case of the EquityMultiple asset management team, they're actually tracking the shipment of those bricks, the mixing of that mortar, the ability of the bricklayers to lay their brick walls on time, under budget, and to the specifications of the plans. On today's show, we're going to explore the asset management process from the time an offering appears on our platform through construction. In this case, a renovation and repositioning of a property in a Washington, D.C. suburb. And we'll see how our asset management team navigates the curveballs that inevitably appear throughout the process.
Hello.
Brian Vail, welcome to the podcast.
Thanks for having me.
To help us better understand the role of an asset manager, I've enlisted the help of my colleague, Brian Vail.
My name is Brian Vail. I started working at EquityMultiple around 2017. Since then, I've worn a number of different hats, but now I'm primarily focused as a member of the asset management team.
First, I want to ask you to introduce yourself. I'm hoping that you can give me both answers, like the answer that you give to someone who works in our industry, who understands what it is that you do to some level. And also, I'm wondering if you can give me the answer that you give to someone that you're introduced to at a party who has no idea maybe what commercial real estate is. I'm sure you have some version of basically explaining what you do.
Yeah, totally do. My principal responsibilities include individual asset and portfolio monitoring and management, investor reporting and communications, and collaborations with the investments team on new deals and additional capital raising.
Right.
So that's sort of the more technical answer. What I would give to someone at a dinner party is more short and simple. I basically monitor the activity and the results at each property and work with the sponsors or the lenders to mitigate risk and maximize value and returns on behalf of our investors. So still a little long-winded, but
yeah, when you say that, do people's eyes glaze over?
Yeah, I mean, it's not like the most sexy thing in the world when you say it this way, but I think it's pretty simple. I'm just taking a look at everyone's investment and making sure it doesn't, nothing bad happens to it.
The key thing to understand here is that in the commercial real estate world, asset management is a fundamentally human endeavor. When Brian talks about mitigating risk and maximizing value on behalf of investors, what he's not saying is that his job is to be in near constant communication with the sponsor, the developer, the lender, the people on the ground at the construction site.
So traditionally speaking, I think asset management is sort of defined as, the high level oversight of asset performance and implementation of a business plan. That includes everything from driving a leasing process, deciding on terms, rates, concessions, anything that is required to sort of meet expectations of the business plan. Another thing would be just monitoring capital improvements. You're really ensuring that the plans are carried out efficiently and effectively and generally on time and on budget. Along those same lines, basically developing annual budgets for improvements.
So in order to better understand what the asset management process looks like, I think it might help if we look at a specific example, like an actual project that our investors have participated in, and go step by step. Brian's going to take us through the story of an offering that EquityMultiple investors participated in starting in the spring of 2018. I'll set the scene here. We're in the Columbia Heights neighborhood of Washington, D.C., this up-and-coming hip part of town just north of the Capitol Mall. In fact, the western boundary of Columbia Heights is 16th Street. That big boulevard that runs directly into the White House. It's springtime, and springtime in the nation's capital means cherry blossoms everywhere. The property is a townhome that the sponsor, D3, is planning on converting into 3 separate condos.
This particular deal came across to us. The original developer had to get rid of the asset because of some personal issues, and subsequently construction was already 60% complete. So we thought this would be a perfect opportunity to sort of acquire and just sort of pick up where the old developer left off, and we didn't think it would take all that long to actually complete the construction and sell.
So our sponsor, D3, is acquiring a project that's over half complete. The previous developer had to bail, and D3 looks at this as an opportunity to pick up where the previous builders left off. Simple enough, right?
At the end of April, maybe mid-April 2018, we published the offering on our site, and investors were entitled to a 9% gross annualized current return, and that would be paid monthly out of a preferred payment reserve that was initially capitalized up front. Investors would also be entitled to 45% of the total profit of sale proceeds when the condo units were sold. In this particular case, there was no senior loan on the property.
Right.
The preferred equity position was the bottom of the capital stack, so to speak. So we negotiated essentially a reserve that would be capitalized up front to pay our investors the return that they were entitled to over the course of 9 months or so. And that's about the amount of time that we thought construction would take.
I want to pause here for a second just to highlight what Brian is saying. 9 months. That's the plan. After 9 months, according to the business plan, the building, now divided into 3 condos, will be through renovation, inspections will be completed, and a certificate of occupancy will have been issued. Then the condos will be sold. During those 9 months, our investors will have been receiving a 9% annualized return in the form of monthly payouts, and upon sale of the condos, receive an additional share of the revenue. But, spoiler alert, this project is going to take longer than 9 months.
For the first few months, the sponsor was doing a phenomenal job, getting through all the renovations that were needed, some of the really, tough stuff. And, by October, they had, reached a pretty significant point of completion. At the time, I think the most difficult part of this was actually just getting approvals.
So it's now October of 2018. We're 5 months into the investment, 4 months left to go to hit our target investment maturity date, and things are looking pretty good. Most of the construction is done, and our progress is hinging on inspections and approvals, a standard part of any construction schedule. In Washington, D.C., the agency responsible for certifying these inspections is the DCRA, the Department of Consumer and Regulatory Affairs.
And so we were under the impression that, we were well ahead of schedule. The only thing that was lagging was really inspections with DCRA.
Okay, so we're 5 months in, we're ready for that to happen, and what happens next?
So this is just sort of one of those things, We saw a few delays in getting approvals from DCRA. That year there was just a ton of snow that pelted the East Coast.
So if in October things were looking good, as we move through the fall and into the winter, the project starts running into delays. Before we know it, it's February of 2019, the date we were expecting to exit the investment.
So the initial maturity date comes up in February of 2019, at which point the sponsor tries to elect for a 3-month extension option.
See, part of our agreement with the sponsor includes an option for them to ask for a 3-month extension, essentially to say, hey, we're almost done, we just need another 3 months. But per that agreement, they were required to have a significant amount of the construction completed. At this point, both of the above-grade condos are essentially complete, but there are still issues with the below-grade unit. They haven't gotten far enough along to get the inspection from DCRA, and this delay means they haven't met the criteria for that extension. So what are the options? They're going to ask for the extension anyway, but the ball's in our court. And this is where Brian's job as an asset manager requires weighing the options and proceeding with knowledge and experience. Instead of forcing the sponsor into a default, essentially cutting our losses, he makes a couple of creative adjustments to the agreement with the sponsor in order to move the project forward.
We wanted to make sure that the sponsor had every opportunity to succeed here. Because we have that profit participation, that also aligns our interests. And if the sponsor succeeds in completing construction and they're able to sell the units, theoretically, so would we and so would our investors. What we did instead was we requested the sponsor to replenish our interest reserve, the amount of cash that would be needed to continue to pay our investors throughout the remainder of the construction process. We wanted them to reaffirm, all the project milestones and guarantees that we had in place. Nothing ever goes completely according to plan. There's always a few speed bumps in between that we have to work with, and that's just pretty typical of any construction project. So, after everything was agreed upon, we were able to keep investors paid. We allowed the sponsor to continue construction. And as the next maturity date approached, at that point, the sponsor had done a phenomenal job. All renovation work had been completed. They received all the approvals that they needed, excluding one, which was taking a little bit longer than expected. But really, they were perfectly set up to get certificate of occupancy. And that was really our criteria for the extension in the first place, is just complete construction. We won't foreclose. We just want to have you move forward with the sale process.
Right. They're working in good faith.
Right. We're at the 1 yard line. Let's just get this done. We're not going to take anyone down on a technicality. It's in all of our best interest to just keep moving forward and get the sales done.
So 3 more months pass. Construction on the below grade condo is completed. Everything is done. Just waiting on that last approval in order to get a certificate of occupancy. Let me stress that again. The construction is done. The trim, the paint, the light fixtures, these are beautiful luxury condos ready to go on the market. It's springtime, the cherry blossoms are in bloom again, but the sponsor still hasn't crossed the finish line due to a fire suppression inspection being delayed. So, given the remarkably short distance left to go on this project, Brian negotiates one more extension. Investors will continue to get monthly distributions plus an extension fee, so the investment is still paying out, and the sponsor just needs one last sprint to get that essential certificate of occupancy.
So by June of 2019, about 13 months after the initial investment, work was finally completed, and they were really just trying to get registration of the units. Once that had gone through, the broker would have been able to start entertaining bids, and we staged some of the units. So we're really geared up, ready to put this out to market, and really we anticipated that these things would really fly off the shelf, so to speak. It was the summer, so it was a busy time of the year for sales. However, when the sponsor was trying to close out the final permits, they were essentially informed by DCRA that the third-party inspection company that the former developer used during their development process to get to that 60% completion point when we took over was actually no longer part of the DCRA program, and moreover, they were being investigated for fraudulent project approvals.
No.
So
this twist in the story deserves a moment. To recap, the sponsor has completed construction, received all of the necessary permitting, and has the units staged to sell. There are potential buyers showing interest. And what happens? The Department of Consumer and Regulatory Affairs, the DCRA, gets in touch to say, remember how you thought this project was 60% completed when you took it over? Yeah, well, the firm that had been doing the inspections for the previous builders, they are no longer approved to provide inspections, and we think they may have conducted inspections on this project in a fraudulent manner, so those old inspections are null and void. And we're going to have to double-check their work. So all the progress you thought you had made up until this point, it's time to move some of that staging furniture and bust open some walls.
DCRA had to come in for another inspection, and really look at, go back through all the different inspections that, this third party company fraudulently passed.
Wow.
So they essentially came back and said that there were a number of items that we had to fix. And, some of that really involved ripping out the walls and putting some new insulation here, or, fixing some electrical there, some things that were pretty invasive.
You've already had to go to the investors twice and say, listen, we're going to, they're asking for an extension. We're going to grant them that extension, but there are some favorable terms that we've agreed to. What does your day look like when you get the call that at this last inch of the project, they're going to have to start ripping open walls?
I remember getting a call from the sponsor who's super transparent and was a pleasure to work with. And I could just hear the disappointment. They had put in so much work, and they were, they'd seen those delays, and they had put together such a spectacular product that, to have to rip it all up was pretty devastating. So, but, that's sort of the nature of things, and everything can't go perfectly. So, you just kind of have to let it pass, swallow it, acknowledge it, accept it, let it go, and try to figure out the best strategy to move forward. So we really just talked about, how we can get ahead of this, where we can save time. Fortunately, the sponsor was able to hit the ground running, really went full speed, got everyone on board, and was able to complete the majority of the work over the next month or so. And this is September at this point.
So here we are, September of 2019, 16 months from our initial investment. And while this project has taken longer than anticipated, Brian has successfully negotiated 2 extensions that guarantee monthly distributions plus extension fees. And we're through the quagmire that was construction and the permitting process. All that's left is to sell these 3 condos. And good news, there's a buyer lined up for one of the units. The sale goes through, and for the first time since investment, investors are seeing the return of some of the capital that was initially invested. 1 down, 2 to go. Prospective buyers are submitting letters of intent, financing is being lined up, but this investment is going to hit one more roadblock before we're through.
Unfortunately, some reports came out that there was some crime in the neighborhood, and this is totally unrelated to the neighborhood, but I guess there had been, some sort of, police chase that ended in the neighborhood, and that really caused a number of parties to walk away, and it really made it difficult. I think the sponsor was even showing the property, and the road was actually closed off with police tape. So
oh no,
they actually couldn't get into the unit.
How can a project run into this many issues in under 2 years? Well, these kinds of delays, setbacks, unforeseen circumstances, they happen all the time in commercial construction. In fact, it is precisely because of these uncertainties that investing in commercial real estate can be so lucrative. Fundamental to the structure of investing is the interplay between risk and reward. It can be easy to lose sight of these basic elements, but the reason that investors have historically seen outsized returns from commercial real estate investing is because investors have also seen total losses from investments in real estate. But this is what makes Brian and his colleagues on the asset management team so valuable. They are the shepherds for our investments. They stand watch through the dark night, navigating the complexities of these complicated projects with a singular focus, guide these investments through to exit with as favorable a result as possible. You've probably noticed that Brian is a pretty mellow guy. That bodes well for us, because he's the one who gets the call about the last-minute snafu, and it's his calm resolve to find solutions that allows us, as investors, to know that we've got an experienced partner on this journey. That's a lot of setbacks. That's a lot of, you think that things are going great, given whatever conditions existed prior, and then another curveball gets thrown. So
Yeah.
how do we end this thing? Like how do we actually get to the exit?
Yeah. So, at this point, the reserve has been depleted, and our preferred equity return, so that current return, that 9%, is still ticking. It's, and it's compounding. So ultimately, the sponsor has to pay that current return before they can start paying themselves, or before we can start sharing in the profit. And it ultimately becomes pretty economically burdensome on the sponsor. And it really reduces their ability to pay themselves back. So essentially, I began discussing the idea of a buyout. This would allow the sponsor to get rid of us and pay our return and make sure the investors, for us, that's great. Our investors get paid, we're out of the deal, and we're off to bigger and better things. And also for the sponsor, they would be able to, recoup some of that purchase with sales of the units. So, we thought that was probably the most fair and best case scenario to really exit this deal in the near term. At the beginning of January of this year, they, bought us out. They repaid the remainder of our principal, which was probably, I think, somewhere around like $1 million, because we had already sold one unit, and paid out what basically would have been, the remainder of our current return to get us to that minimum return threshold, that contractual 9% that we entitled investors to. So in total, with extension fees, it came out to about, just under 11% IRR gross, about a 1.2 x multiple. So considering, all the trouble that we had with construction and approvals and, ultimately during the sale process, this was a pretty good turnout to a deal that was problematic.
So there we have it. Resolution. A negotiated exit, different than what we had initially planned, but so much better than what could have been. Investors still come away with a double-digit return. The sponsor gets to sell the remaining units, recouping their initial investment. And Brian is on to the next equity multiple investment, calmly guiding capital through the construction schedules, bureaucracy, and market fluctuations. Man, I really appreciate you taking the time to walk through all this stuff.
Yeah, of course. Happy to do so.
I'll talk to you soon.
All right.
Thanks again to my guest, Equity Multiple Asset Management Associate Brian Vail. Thanks to you for listening to Multiple Perspectives. Don't forget to subscribe to the show in your podcast app of choice. For more information and to see the offerings currently available on the Equity Multiple platform, we've got links in the show notes. For Equity Multiple, I'm David Lofgren. See you next time. It is important that investors understand that such investments involve risk, including the potential loss of capital and illiquidity, and may not be suitable for all investors. Please review all risk disclosure documents before making any investment decisions. Securities offered through Growth Capital Services, member FINRA SIPC, Office of Supervisory Jurisdiction, 582 Market Street, Suite 300, San Francisco, California, 94104.